Hello, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Wednesday, July 9th, in the middle of the U.S. session. Today we are seeing positive risk appetite. U.S. stock indices are up after a brief dip early in the U.S. session. We are also seeing Japanese yen weakness across the board, which is a sign of risk-on trading. Let's take a look at the Euro yen, Pound yen, and the Canadian dollar yen. The Euro yen pair bounced off a recent slightly bullish channel support, as you can see in the 4-hour chart. This channel, however, reflects consolidation and not a bullish market. In fact, the prevailing trend is, or was, bearish. Still, today's rally suggests some near-term bullish bias and allows us to judge whether will allow us to judge whether the market is going to be done with consolidation. For example, if the current rally tops off at the 138.80 to 139 area, we would see a failed attempt to challenge last week's high near 139.30. This appearance of a lower high would be the first clue of bearish continuation. Another clue would be the 4-hour RSI holding below 60 or at 60. After tagging 30, a hold below 60 would show maintenance of the bearish momentum established by the most recent bearish swing that we saw in the 4-hour chart. In this scenario, with the top here at 138.80 to 139, in this scenario the pressure will be towards the June lows near 137.80, with further downside risk towards the February and 2014 lows around 136.22. While the Euro-Yen pair has a prevailing bearish outlook that suggests traders might sell after the current rally, the Pound-Yen pair looks to continue a prevailing bullish trend on the back of today's risk-on trading. After bouncing off 173.75, staying above the 104-hour simple moving average, and a pair of rising trend lines that came up from the 169.53 low, the Pound-Yen has returned above 174. The market looks poised to send the pair toward the 175.25.35 highs on the year. It is not inconceivable that we might get further consolidation, especially if the market fails to push above 175. But the bearish outlook should be shelved and should not enter the picture until a break below 172.35. The Canadian dollar-Japanese yen pair retreated from 96.22, but found support at 95 and the 100 simple moving average in this 4-hour chart. The prevailing trend is bullish, as you can tell from price action, and the moving averages were moving apart, suggesting recent acceleration of the uptrend. The dip from 96.22 to 95 thus should be seen as a bearish correction swing within the bullish mode. And with the bullish mode intact, there are likely to be buyers after the correction swing. So far this week, we are seeing this bullish continuation attempt as price moves above a falling trend line from last week's high of 96.22. The bearish outlook is shelved unless there is a break below 94.70. Otherwise, the current bullish outlook has upside to 96.22, and above that, we could be looking at the 97.18 to 97.45 common highs that we saw in 2013. And that wraps it up for today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you good trading and safe trading.